Hello traders, welcome to Zero Traders. So today we'll be analyzing dollar using DXY. DXY is actually the benchmark asset for the dollar, right? So it's an index used to measure the dollar, the performance of the dollar, right? So before taking a look at the technicals, let's look at the fundamental perspective, right? So today by 8 p.m. GMT plus one time zone, FOMC minutes is going to be released, and if we look right here, the federal funds rate, which is their interest rate, they have actually not hiked interest rates since this year 2025. So we can see the last time they cut hiked interest rate was November 7th. So for this year they've not hiked interest rate and they've not cut interest rate, as you can see right. So we could possibly see this play out, that they are not also going to cut interest rate, right? Because they, before they make decisions of cutting anything interest rate, they have to look at the health of the economy before making such decision, right? So what makes it Fed to hike interest rate? They will only hike interest rate when inflation is high, is above their target, right? So but then they have to cut interest rate when inflation is far below their target. So let's quickly take a look at the measures of inflation. So CPI, primary tool used to measure inflation, right? Because it measures the change in the prices of goods and services purchased by consumers, right? So we can see that CPI here is actually negative. It came out negative last time, and also it has been like that since March. Negative. It has been always been below their target, which is not good. However, let's not use CPI month over month for any decision making. Let's quickly take a look at CPI YOY, which is year over year for decision, because this is what Fed and the big institutions, this is what they use, this CPI that they use for making any decision, right? So we can see that CPI, even YOY, is also negative, and it has been like that right since March. This is actually not good for the dollar, right? Because currently there is no interest, there is no expectation for interest rate hike at all. There is no expectation. So today we are not even expecting anything like interest rate hike. So what we are looking at is either Fed will cut interest rate, or they will leave it neutral the way it is right now. Personally, that is what I'm looking at. It's either they cut it or they will leave it the way it is, right? So looking at their GDP, we can see it actually came out above the target, the forecast, right? It came out above the forecast. It's actually good because it is good, but it's also very bad because the economy is not really growing. If we use the word, let's use the word growing. Or we'll say the economy is just sluggish, sluggish slash growing, right? Look, if we use the last NFP non-farm payroll that came up, we can see that non-farm payroll came out positive, and that means that there is a level of stability and growth in the economy temporarily, right? We would say in the short term, right? So there's a level of stability and growth. But then, having said all of this, what we are looking at is either Fed, they will cut interest rate today, or they will leave it the way it is, right? So that's what we are looking at. So let's take a look at the technical perspective. As you can see right here on the weekly time frame first, we can see that we are very, very bearish on the weekly time frame. Even having this kind of engulfing candle, this is actually something that we should look out for. So let's scale down to daily time frame. So looking at the daily time frame, we can see there's already a break of structural bearish. So this perfectly aligns with the fundamental slash macroeconomics like that we analyzed earlier, right? So most likely today is either Fed did not cut interest rate, of which that is actually what I'm actually expecting the most, because they have been hesitant in cutting interest rate, although they've been urged by the president to cut interest rate, right, previously, but then they have actually not cut it. So we don't know if they are actually going to cut it today or they are not going to cut it. But then overall, we know that we are actually bearish on the dollar, right? So either they cut it or they leave it neutral. If they cut it, it's going to affect the dollar negatively, right? With dollar negatively, dollar, we could see dollar shrinking, like really going from this level where we are right now, going this way, right, this far. But then if they leave it neutral, it could either positively influence it to go higher, or looking at, let's say, other economic factors, right? Or from here, it will also negatively influence it to go lower, because aligning it with our technical analysis right now, this is where we should even be taking sales to the downside, right? So our technical analysis is telling us is sell. So fundamentals could align with technicals, but then one thing we know for sure is that fundamentals is more powerful than technicals. So whatever the fundamentals does, that is actually what is going to play out in the market, right? But for now, we know that the market is bearish, technically, even fundamentally bearish.